Welcome, everyone. We're going to kick off. So thank you so much for making the time. And don't worry, we'll have plenty of time to talk after the panel. But I like to see the excitement. We're all really looking forward to connecting. And this is what this event is about. So we promise to end up with networking. Thank you so much. First of all, we really want to acknowledge that it's a super busy week. So we're very grateful that you decided to join us for this event. This event has been organized by the CIFAR Alliance. For those that are not that familiar with the CIFAR Alliance, is a network of organizations committed to advancing innovation in climate resilience and adaptation. And this is the third of a series of conversations around gender, climate resilience, and financial inclusion that has been possible to the generous support of the MetLife Foundation and, of course, to our hosts, MasterCard Center for Inclusive Growth. Thank you so much for having us. And I would like to leave you with our dear friend, Charlie Pettigrew from MetLife Foundation.
So I'm not as good as Maria, so I do have some notes. I'm sorry, but really, I just wanted to first off say thank you everyone for joining us today. Yeah, I know this is a very busy week, and we really appreciate you taking the time to listen to what we have to talk about. And I think it's a really important issue and something that we're really proud of that we've been able to help fund and really help work with everyone. So just real quick, the other couple things I want to mention. So this event is the result of the Alliance's ongoing efforts over the past year to prioritize a gender lens in discussions related to climate change and its impact on vulnerable communities. We really are thrilled to see so many of you here today. Addressing climate change demands that we recognize and respond to women's unique challenges, especially in vulnerable communities. By bringing a gender responsive approach to financial services, we can really ensure that our solutions are truly inclusive and impactful in building climate resilience. Over the past year, the CIFAR Alliance and BFA Global have led efforts to spotlight innovative solutions, enabling financial service providers to address climate risks while focusing on gender equity. Their leadership in bringing diverse stakeholders together has been instrumental in advancing these critical conversations. So today's event really builds on the success of the Gender Intentional Climate Solutions panel at the Skull World Forum earlier this year, where we really focused on the importance of gender-sensitive innovations in climate finance. That momentum from the discussion has brought us to where we are today, gathering global leaders and change makers to explore new strategies for advancing inclusive finance and gender-responsive solutions. And then these discussions really underscore the importance of collaboration, bringing together financial service providers, philanthropic organizations, and thought leaders who will help us create scalable, impactful solutions that address the intersection of inclusive finance, gender, and climate change. So thank you very much. And I think I'm turning it over to Carolina.
Thank you. Don't worry, I also have notes. We're not pros like Maria. I will just really echo the welcome. Thank you so much for being here. It is always a pleasure to see so many new faces and friendly faces. I know I can say again on behalf of the CIFAR Alliance, on the MetLife Foundation, and the MasterCard Center for Inclusive Growth, we're thrilled to have you here. My name is Carolina. I sit on the Insights team here at the center, which means I've had the distinct pleasure of working very closely with the CIFAR Alliance and the BFA team. Now, I was thinking about it, I think 2 years since we joined the Alliance. I really just want to take this moment to say thank you to the team, because for us, financial inclusion has been a big part of who we are and the strategy at the company. And it was also meant that we were acutely aware that the population that we were serving, those who are most financially vulnerable, are also the ones who are most impacted by climate change. The most impacted, and frankly, they're usually the ones who are impacted first. And so on our journey, we had the privilege of getting to know the CIFAR Alliance, still are, and we were so impressed, not only with who they are and the team that they bring, but also this room is a fantastic example of that. The people we bring together, they bring together from across sectors. And so we're thrilled for the conversations that are going to come out of this. For us, really, we come to UNGA and to Climate Week for a lot of talks, and I was talking to people in the elevator, a lot of schedules, a lot of gridlock traffic. So thank you for being here. But we do it not just because of the information we're presented with, the people and everything we'll learn, but for the people we'll meet. So my call to you is, please, we hope that this sparks conversation, this sparks questions for you, and that you come and you ask us, all of us, from the MetLife Foundation, the Center, the CIFAR Alliance. We're really here to hopefully be thought partners and to just continue the conversation. So to Maria's point, we'll have lots of networking. That's the whole point of this. But I'm really thrilled to talk to you, to meet with you, and really to just get to know you better. So with that, I will hand it over to Nelly for our panel.
Thank you, Maria and Carolina and the team that has helped us really put this together. Charlie also, and Carolina and Ali for being our co-conspirators in bringing this event to life. This is a series of events where we've been trying to bridge the gap in the discourse of, yes, the effects of climate change, but also how climate change disproportionately affects women and what are the innovations and the potential solutions for women. And trying to focus more on the solutions than on the problems. I know this crowd here, we're preaching to the choir of how urgent it is to adapt. And to figure out resilience to climate change. So we want to focus more on what we've learned in this journey and what innovations we know that work and what kind of insights we've gathered that can help inform all of our work, and particularly the work that we could do together, which is what the Alliance is about. So we've also want to acknowledge the team of PFA who's here, David, Shani, Maxime, Maria, for all the work putting this event together, and for all of you, especially as my colleagues have said, for being here with us this morning. So before we delve into the panel, we wanted to share with you some of the things we found. So we went out and spoke. We had interviews and surveyed several financial service providers who we knew had started their climate journey in some shape or form, be it because they were innovating with particular products, or because they were being particularly affected, or because they were trying to start delving into this topic more and saying, okay, but how do we also adapt, and how do we help our clients adapt better, and how do we adapt our products to solve our clients better who are being affected by the effects of climate change. So in that journey, we interviewed and surveyed 10 financial service providers. Oh, here, sorry. And we've learned a lot of what some of you have also portrayed in your research, particularly CGAP, CPI, Women's World Banking. Many of you who are here have already said some of this. And we also asked, well, how willing are you to start a journey and working with us in filling in some of the gaps that I'm going to show you? And the very interesting news is that more than 80% of them said, yes, we are very eager to work alongside a partner that would help us overcome the gaps that we're facing in the face of climate change. So collectively, these institutions represent over 7 million clients. They are in Mexico, Panama, Dominican Republic, and Brazil, in Latin America, and in Africa, in Uganda and Kenya. And I want to recognize David Elcer, Maria, my colleague Julian, who have helped us approach these financial service providers and learn from them and their journey. So these are some of the general findings. Then I'm going to go in Africa and Latin America. In Africa, I want to say, in both regions, I want to say what we found was common is that they all recognize the importance of climate change and are beginning to implement policies and strategies to address the risks, such as floods and droughts, which is what they mentioned was more pressing. And they all found that the main barriers of actions is technical expertise and limited financial resources to address climate risks effectively. And also one of the barriers is which is going to be later in the presentation, is when they want to assess risk. This is a very interesting point, because it's not only they know their clients are affected by climate change, there's been a drought, there's been a flood, but to what extent That is the question. And how they separate their clients in terms of, oh, these has been more effective, so we have to activate this type of financial products versus these who, even where they could be in the same geographic area that has been affected by the climate shock, still the way the climate shock affects them, it's different. So these are some of the gaps that they are seeing. And although there are some technological solutions out there, there's still not enough. And the gender aspect, the gender lens, even when the United Nations says 80% of those displaced by climate change are women, still financial service providers are struggling to find or understand how they are affected differently and how to respond to that, of course, differently. Some of them climate smart related products, and I will mention which to what we mean by that, such as emergency loans, remains limited but is gaining interest. And we found more climate smart products in Africa than in Latin America. So these are some of the institutions that responded and we spoke with. We did not only survey them, we also interview them in Latin America. And the most interesting finding is that 42.9% report having had losses due to climate change. So this is not something they need to adapt for their clients and their products, but also themselves, their infrastructure and their banking agents. So they're also being affected by climate change and they're trying to figure out how to adapt in that context as well. Most of them, the majority, 57.1%, have insurance policy to mitigate the impact of climate risk, but only 25% have some sort of tool to assess how their clients are exposed to these risks. And no institution has any mechanism to monitor its portfolio in relation to climate risk, nor to evaluate the geographies or client segments in the lens of climate change. So these are some of the specific, we're going to be sharing this along with a blog in the coming weeks. This is part of the work that we have been doing with MetLife Foundation that Charlie was mentioning. And as you see, there is an important record on portfolio losses due to climate hazards separately. It's almost 42.9%. Most of them have an insurance policy. Most of them do not have guidelines to mitigate risks. And these are, like, for example, when we ask, so if you have any specific tools to evaluate their climate risk exposure to their customers, those who responded yes, they had their own elaboration. So they created their own tool to assess how they're being exposed or affected by climate change. And the others use adaptive capacity index, mostly in rural areas, and think hazard. Those were the three that were mentioned in Latin America. And there is no institutionalized mechanism for evaluating and optimizing climate risk in business expansion activities or optimizing geographical concentration. So meaning how they manage their business, how to expand their business, and how to do business intelligence, they have not factored in the climate change factor. So they all consider, so in Latin America also, less consider that climate change is urgent in comparison to Africa. So in Africa, they said this is extremely important. In Latin America, only 14.3% of institutions consider climate change extremely important in their operations. However, 57% of them have experienced a climate disaster in their areas of operations. And this particularly came out in the case of Brazil, which you may understand due to recent unfortunate events. And the main obstacle for many of them to be able to adapt to climate change is the lack of a clear strategy, the technical expertise, and understanding how to go about the risks that this represent. So these are some other questions that we said. So how important or strategic is climate change to your institution? So 57% said slightly important and only 14% said extremely important. And you're going to see the difference with Africa, no? So in terms of gender, so what, oh no, before that, what is it that they assume is, or they see is the main barrier? So 42% is the lack of strategy. We don't know how to fit it in. And most of us here, because this is actually how the Alliance came about, would relate to that. The Alliance started because there was a group of organizations who were seeing the climate was a huge issue. And then a few of you, David here, who was there from the beginning, said, well, we really need to bridge that gap and we need to learn fast and come together, and coming together is the best way of learning. So this is actually also what's happening with the financial service providers. They too are trying to figure out how they go about their climate journeys and how to put together a strategy, you know? And also 28% said lack of expertise, which is also related to the lack of strategy. And 14% said that they're in the process of implementation. So this is interesting because these FSPs that we interviewed and surveyed were FSPs that already started their journey somehow. So we're not talking to the whole universe here, because if we did that, this would be even higher. We're talking to those that we knew had been doing some work around to adapt to climate change. So how aware are you aware of the risks that you may face? So 42% were very aware and only 28% moderately aware. And so in terms of gender, which is a particular lens that we wanted to explore with these FSPs, and actually asking how, if they are incorporating a gender lens into their work. These are some of the things that they're doing. This was the prior slide. Their temporary suspension of loan repayments, distribution of essential supplies, and access to emergency credit lines, which is only 42% in the case of Latin America. And if they were in an ideal scenario, the vast majority said that they would do emergency loans. In an ideal scenario, they see that as the financial product that they will be more prone to deploying. So if they distribute early warnings, this is also different from Africa. And the FSPs that we interviewed in Africa were more prepared in terms of informing and accessing their clients in terms of in a climate shock. And they said, what gender elements are you considering in your climate action? So 71% said nothing, none. So not to design their products, not to deploy their products, not to understand their clients. So it's just non-existent. And when we interview them, this was consistent as well. They say, no, we have not factored this in. They see their clients as a group instead of differentiating by gender. In some cases, they don't even have the data separated by gender, which is very easy to do in these days. And why do they think that they did not include incorporating a gender lens into their climate action strategies? And again, the same response is a lack of technical expertise and a lack of awareness and understanding of gender issues. So how are these products can adapt or not for the specific needs of women. Women are tend to be first responders. They tend to be those most connected to the community. So they're not really understanding what role or how to work with women in the context of climate change. However, we know that women have a strong role that they play when a climate shock has hit a community, because they're usually the first to organize and do something about it. And then, as I said, there's a lot of interest of working in the program that we're trying to design and put together with some of our organizations here, not allowed still to say that it's confirmed, but almost, to do a climate champions journey program, and also to work with these organizations much more closer to bridge this gap. And in East Africa, and here, there's 33% of institutions who manage to avoid losses, and they all have insurance policy and guidelines to mitigate the impact of climate risks, but only 33% have a specific tool to assess their clients' exposure to this risks. Sorry. And none of them report portfolio losses due to climate hazards separately. but they all have insurance policy to mitigate climate impact for the infrastructure for the organization itself. And here, if they have a specific tool, then we have a vast majority saying no, 66.7%, which is consistent, a little higher. And they have Yapu Solutions platform and risk mapping as a very, very basic tool. But again, when we interviewed, and also my colleague Jacob, who's been doing some of this work on the ground for the past few years with the Resilience Plus program, he's also learned that the nuances on how effective, how it affected their different clients is one of the main barriers for them to be able to activate and deploy some of the financial products that they could in the face of climate shock. And all organizations are aware of the climate risk they may face, but their main obstacle is, again, lack of expertise, funding, and insufficient technical and financial support. Only 33% have implemented emergency loans related to climate events, and they all highlighted an opportunity to improve the financial preparedness for these risks. So how important? As I mentioned, 66% said very important, and 33% said extremely important. None of them, 66% of them, do not have a climate disaster policy, and if they have experienced a climate disaster within their footprint, 33% said yes. The main barriers, as I mentioned, lack of expertise, lack of funding, and if they offer any climate smart products, 66 said yes. As I mentioned, this is much higher than Latin America, and then had credit like loans, guarantees for the agriculture value chain, solar products, biodigester, and use of organic fertilizers, financing, Earth, what is this, EBA? I forgot the acronym of solutions. So they're all aware. So they're between moderately and extremely aware, the vast majority, almost 70% of them, of the climate risk that they may face. In terms of gender, they don't have, there's a little better than in Latin America, and they do all distribute early warnings to their customers. They send liquidity quickly to their customers during emergency, at least these 3 FSPs that we interviewed in Uganda and Kenya. And they most of them have educational campaigns. And and also a big difference was in Latin America, none of the branch managers could take response actions in the face of climate shock, versus here in Africa, where you had 66% of branch managers are able to take action during a climate shock. And they said, are you considering any gender elements in your climate actions initiatives? And they some of them said targeting financial products for women and having gender risk assessment, as I said, more than in Latin America. And if you insure your loan portfolio against natural disaster, they all said yes. And this expressed much more interest also than in Latin America, but in Latin America as well. But this was just very, they were willing to spend more time and thought of it more urgent to do something and to start working in terms of technical assistance, capacity building in the face of climate change. So this is a little bit of the exploration that we've done, of the conversations that we've had, of this learning journey that we've gone through. And it is very consistent to the findings that many of you have had and have highlighted in your organizations. And this is just an opportunity for us as some sort of baseline, although it's not the formal baseline, but a starting point to start this journey with these FSPs and start working with them much more in depth and trying to overcome some of the gaps and some of the obstacles that they are indicating themselves. So with this small context, I wanted to invite my fellow panelists to take a seat. So we start the discussion, and hopefully, please, Carrie, Peter, Elizabeth, Anand. Yes, you can choose however you feel more comfortable. Jorge Gastelumendi from Atlantic Council is running a few minutes late, but he also joined. So if you see someone randomly walk in, I'm making excuses for him. And thank you so much for your generosity, your passion. We've all had the experience of learning from you and your organizations in this journey. And the question that brings us to this panel and the opportunity to learn from you is to respond: what kind of innovations, financial services, and products will truly make a difference for women and vulnerable communities in the face of climate change? So this is the overarching question for you. But before we go into responding from, because it's very interesting, this panel, they all come from different experience and different organizations. So you're going to see how everyone, or many of us, are tackling this this problem from different fronts. Before we go into this panel, I want to introduce them to you. And first, I'll go with Carrie Dittmeyer, Technical Director at Chemonics, and leads the Climate Gender Equity Fund, a public-private partnership led by USAID with some of the founding members there: Amazon, Reckitt, the UPS Foundation, and Visa Foundation. The fund seeks to increase access to climate finance for gender-responsive, women-led, and women-benefiting organizations. This CGEF is one of the first major activities under USAID's Climate Finance for Development Accelerator. So here we have Carrie with us, and also Amanda, who will join us later during the Q&A from this great team. And as a way of introduction, Carrie, would you share with us something interesting and exciting that you learned this year?
Sure. Thank you. Thank you so much for the introduction. As Nelly said, I'm Carrie Dittmeyer, Technical Director on CFDA. Going to be throwing a lot of acronyms at you, but I know as gender climate folks, everybody's familiar with lots of acronyms. So I specifically lead the Climate Gender Equity Fund, as Nelly said. And I was thinking a lot about this question of what have I learned, because CGEF is early in our journey. We launched at COP27, but we've only been doing grant making for about a year now. And one of the key learnings that I wanted to point to, amongst many learnings when you're having public and private partners come together to align on mutual objectives, is something actually that one of our grantees shared as I was prepping with her for some of the panels she's going to speak on throughout this week. And she shared this great quote that was, "It takes a village to raise a startup." And for some reason, that's just stuck in the back of my mind. And I know it's a little bit cheesy, but I just kept thinking about this idea of it takes a village to raise a startup. It takes a village to launch a new innovation like a public-private partnership and grant vehicle like CGEF. And it takes a village to increase access to finance for these solutions. And then finally, it's going to take a village for us to close this immense gender climate finance gap. And so I just wanted to share that learning to set the stage for today, because I think that's the reason we're all here, is to really explore with each other what part of that village do we each play, and how can we come together with our unique assets, resources, and skills to really think about how we can close this gender climate finance gap. So I'll get into more of the nitty gritty, but wanted to start off on a light note, straight from the mouths of one of our incredible women climate entrepreneurs. So with that, I'll hand it back to you.
Thank you, Carrie, for bringing the voice of the entrepreneur to the room. So next, Elizabeth Ballrick. She is Managing Director at Women's World Banking Asset Management, which directs equity investments into inclusive finance institution in the Women's World Banking Network. Welcome, Elizabeth. And as a way of introduction, would you share with us something interesting and exciting that you've learned this year?
Fantastic. Good morning, everyone. Thanks so much for the introduction. Yes, Elizabeth Ballrick with Women's World Banking Asset Management. For those that are not familiar with Women's World Banking, we're a global nonprofit, having worked on women's financial inclusion for over 45 years now, and increasingly also now looking at the intersection of women and climate change. And I specifically work in the asset management arm, where we make minority equity investments in financial service providers, helping them to reach more women clients, be more gender diverse internally, and increasingly also looking at how to address climate vulnerabilities of their customer base, especially women. So in terms of interesting facts, yeah, we've done a lot of research at Women's World Banking also at that intersection of gender and climate. And there, we've heard a lot of statistics in the field. We'll hear a lot more today. For example, the fact that women are 14 times more likely to die from climate-related events. So that is on a rather depressing note. But I think on the more uplifting side, women, I think, are also the solution to these challenges. We see through the work that we are doing, for example, through some of our investee companies, that women are more likely to invest in electric vehicles when offered. Women are more likely to buy insurance products when offered, and they use then those proceeds in the end also to invest in the health of their family. And as we've heard, they're also typically the first responders. So I'm optimistic that women are also the solution to this huge global problem that we're all facing. And so I'm happy to work, along the community on these issues.
Thank you, Elizabeth, and welcome. Jorge, you made it just in time. Jorge Gastelumendi, Senior Director at the Atlantic Council Climate Resilience Center. Congrats on the new name and the promotion. Jorge leads the innovative policy and finance portfolio at the center. He also manages the COP Resilience Hub, which the CIFAR Alliance has attended for the past years. He sits at the steering committee of the Cities Climate Finance Leadership Alliance, and also leads the High-Level Climate Champions Initiative on Insurance and Resilience. Thank you, Jorge. And as a way of introduction, what has been the most exciting thing that you've learned this year so far?
Thank you. Thanks, Nelly, for the invitation. And I think for us, it's just women's resilience. We've been working with the Self-Employed Women Association, which is a trade union in India, for the past 2 years and a half. And this year, they were double hit by both flooding and extreme heat. We've tried to set up with them a process in which they can access insurance. I'll talk more about later. But the capacity for them to actually get back from the impacts that they're receiving on an ongoing basis is just really, really something to watch. When I get into my day-to-day work, and I realize how difficult it is to work on climate adaptation, how difficult it is to channel resources towards that, how difficult it is to move agendas and to try to change the world, I always get a breath of fresh air working with them, talking with them, and it's a good reminder that we just need to keep just going up, putting a good fight, and trying to bring empathy into our work. So for me, those are the little things that change the way I operate. I just wanted to share that as a reflection, because we get into the nitty-gritty of this amount of money or that product, or if it's innovative or not. And at the end of the day, we are dealing with human beings, and the resilience that they have is just amazing, and very heartwarming to watch and to be part of it.
Thank you, Jorge. It takes a village, like Carrie said. Anand, joining us from India. Thank you for coming all the way in this busy week. And he is associate partner at Microsafe Consulting, one of the members of the CIFAR Alliance. And Microsafe Consulting also leads two of our important working collabs at the Alliance, the Elevating the Voice of the Affected People and the Climate Resilience and Agriculture for collab. So thank you, Anand, for being here. We know that you've led many research projects underground, understanding the disproportionate effects of climate change, particularly on vulnerable populations. And so as a way of introduction as well, what would you share with us that has been the most exciting for you, learning for you this year?
Yeah, thanks for having me here. It's been a long way and some bit of jet lag, but I'm good now. So essentially, for those who know Microsafe Consulting, we've always sort of championed the voices of the poor. So in fact, all of our work, where we work with financial institutions, the DFIs, the philanthropies, the corporates, the focus is that how can we inform our work by bringing knowledge, bringing data from the people themselves, right? So that's been pretty much the approach even on our climate work. So that's why we, as you said, we sort of manage the collab on elevating voices of the poor. And the idea is, how can you get, how do you speak to people who are actually impacted by the climate risk? How do you design tools to be able to capture those risks? And then how do you translate some of what they are saying into products and services which financial institutions can then sort of deliver? One of the key learnings this year, in fact, it's been a sort of continuum, I would say, for the last couple of years that we have been working on is the sheer impossibility of, not impossibility is a negative word, but what I would say is that sheer difficulty of getting financial institutions interested in adaptation. Mitigation by itself is something that they have now started to come to terms with in terms of being able to understand what are the risks and then how do you de-risk and all of that. But adaptation, I think there's still a long journey that we need to cover. Of course, there is this issue of commons because a lot of these assets that we are talking about are commonly held resources, right? And we generally from economic literature know the difficulties of managing those commons, right? So, and add to that the layer of getting financial institutions to fund it. There's some brilliant work that our members within CIFAR are doing, especially CGAP, on being sort of putting the framework around it. There's a markets approach, there's a layered approach, and we had an opportunity to work with them, which kind of deepened our understanding on that. So yeah, so I'm not sort of pessimistic, but yeah, it's a tough and the long road ahead. I'll stop there.
Thank you, Anant, and welcome. And last but not least, Peter, thank you for joining us. A lot of the research your team has led has been a true inspiration for us at the CIFAR Alliance and the work that we're doing at this intersection between climate and finance. Peter Setterly from Climate Change Lead at CGAP. He leads the work on the role of financial services in climate change with an emphasis on resilience and adaptation, which aims to understand how vulnerable people are adapting and protecting themselves from climate change and how various financial services can support those strategies and what actions financial sector stakeholders can take to make financial inclusion a more effective enabler of climate adaptation and resilience. Thank you, Peter, for being here and doing this relevant work. And as a way of introduction, what would you share as your key learning so far this year?
Thanks so much, Nelly, and thanks to MetLife and the Mascot Center for having us and having me for this panel. It's great to see so many friends and partners in the room. I think the most important thing we've learned in the last 2 years that we've been focusing on climate change is just how central the intersection between climate and financial inclusion is for both sectors, right? So, and which we weren't sure of, to be honest, when we started this work, we weren't sure what we were going to find. But it's clear to us now that climate change poses an enormous challenge for financial inclusion and one that we need to rise to as an industry, because as climate risk grows for clients, and we saw some of the data that Nelly shared, we have similar findings from our own work, the climate risk is rising for clients. As that happens, financial institutions will in part respond by pulling back from climate vulnerable segments. And that's something that we have to avoid and have to tackle together as a community. At the same time, though, inclusive finance also presents an enormous opportunity for the climate agenda, and one that is, I think, underexplored and underutilized, and where we also have a big role to play. As we're here in New York Climate Week, the COP is focused on climate finance. There's a lot of conversation on how many billions and trillions are going to be needed and by when and who's going to pay what. And what we don't hear as much is who gets access to that climate finance, and specifically how much of it makes it down to the grassroots level into the hands of climate vulnerable populations themselves. There's not great data on that. The data that do exist are not very reassuring, right? So that's a problem from where we're sitting for the climate agenda, and one that inclusive finance is very well equipped to help to solve. But that requires partnership between not just organizations in this room, but with a broad range of climate players as well. So it's great to see so many of us here today.
Thank you, Peter. And in that context, and coming back to you, Carrie, you have the great privilege to work with those in the solution side of this umbrella of climate change. And in this journey, what do you think are some of the key learnings of the Climate Gender Equity Fund work to demonstrate why gender responsive climate finance is so critical and that impact it can have to women-led organizations?
Yeah, absolutely. Happy to jump in. And as I mentioned in our opening remarks, CGF is relatively early on in our grant making journey. So we have actually just announced yesterday 3 new grantees, so 8 grantees total. And so the first 5 are about 6 months into their journey, and then the other ones are brand new. So what I wanted to do today is maybe focus on CGF as a model and share some of the learnings of that model. And then I hope next year I'll have some great learnings from our actual grant making as well. So CGF was really born out of a co-creation between USAID and Amazon. And they really came together and said, we know we want to do something at this climate gender nexus, but what do we do? Where do we start? And so they did quite a bit of landscaping analysis, as I'm sure many in this room have also done, by going directly to women leaders in emerging markets around the world and asking, what do you need? And unsurprisingly, resoundingly, what they heard was, we need money. We need to, we're over mentored and underfunded. I think we've all probably heard that quote. And we just need you to write the check. And so that's really how CGF was born, as how can we really create an innovative structure that gets that money into the hands of these women entrepreneurs fast in an efficient way, and in a way that is flexible and makes sense to them. And so CGF really, we've refined that model of, okay, what does that mean? Because even once we can answer that question of, we know we need to get the money in the hands of these entrepreneurs, okay, which entrepreneurs and where and how? And so CGF has really narrowed in on what we like to call the multiplier effect. And what I mean by that is we really focus at this kind of intermediary ecosystem level. And so to date, we focused on women-led investment funds and vehicles that are investing in gender and climate solutions, as well as kind of the ecosystem builder category. So think incubators, accelerators, network organizations that are strengthening the capacity of these women climate entrepreneurs. And the reason we have approached it in this way is to really say, you know, we know that these women entrepreneurs need increased access to finance, but how can we actually look within these local ecosystems to increase the financial products on the market that are being provided by women? And so that's where we really see that trickle down effect of, when we provide a flexible grant to a fund manager, for example, they then go on to make an investment directly in a either women-led or women benefiting climate solution. You can see where I'm going with this. That women entrepreneur then goes on to lead a climate mitigation or adaptation solution for their community. And then ultimately, when you get down to the community level, we have more women that are benefiting from climate solutions that are led by women. I know we have a lot of data heavy folks in the room, but I think what CGF is really living out is some of the early data that we've seen on gender lens investing, which is, we know women invest in more women. So women are 3 times more likely to invest in a company with a CEO that is a woman, and 2 times more likely to invest in a startup that is founded by a woman. Not only that, but we know gender balanced teams outperform their peers. I'm sure many have heard the awesome IFC data point that is, gender balanced teams often outperform their peers with an IRR of 10 to 20% higher than their peers. And so, of course, these are statistics that are not CGF specific or not climate specific, but I think what our goal on CGF is how can we get there? How can we use these data points and really use CGF kind of as a case study that showcases this in action? And so maybe to share one example, we have an incredible fund manager that was one of our first grantees called ATG Samada. If you're not familiar with it, it was co-founded by 2 incredible women, Lisa and Lalemba, who actually started out trying to launch their own funds individually, and then came together to launch a fund focused specifically, it's basically a gender lens venture fund that focuses on early stage businesses, of which climate is a big focus. And I think just the fact alone that they started this journey independently and then had to come together speaks to the challenges that they faced. But it's also a really incredible success story where we see these women innovating to say, we know we want to do this. We know we want to increase access to finance in our local markets, and how can we get creative about doing that? But one of the reasons why I mentioned this example specifically is emerging female fund managers constantly cite track record as one of the biggest challenges that they face. So when they get in a meeting with mainstream investors, the message is, you don't have the track record, even though granted, these women are often coming with 20 plus years of investment experience individually, but I'm sure many have heard, you know, it's not the track record of the investment team or as a fund together. And so one of the ways that fund managers are actually able to use the CGF grant is for that. So they're actually able to take the CGF grant and use it to help strengthen their track record for their fund. And so ATG Samada has actually used the CGF grant for a track record investment in a really interesting climate and gender solution that's a logistics marketplace company in Mozambique, who's actually connecting carriers and suppliers in a more efficient way to reduce emissions in the local market. And the reason I point to this example is because I think it's a really unique example of this climate gender nexus. I know when I first kind of came into this field, I always thought climate smart ag, or maybe something that we're a little bit more familiar with. But I think this is a really great example because we see a woman-led fund. So 2 women leading a fund. They're providing an investment in a logistics marketplace company that's co-founded and led by women. Not only that, but this logistics marketplace company is increasing employment opportunities for other women in the market in a traditionally male-dominated sector. And then ultimately, at the end of that kind of trickle down, you see then women in the community actually benefiting from the reduction in emissions. And so I think that's an example where you can really see what I mean by the multiplier effect, and why when we kind of marry this top-down and bottom-up approach of catalytic infusions of flexible grant capital at various entry points within the ecosystem, we really start to then see that finance trickle down throughout the market, and hopefully then strengthen it from kind of a systemic point of view. So those are this model of the multiplier effect, I think, is where we're really seeing the strength of CGEF come through. And I'm excited as we continue to bring on new grantees, we'll really be able to see that come to fruition with some concrete data points and case studies. But maybe just to summarize, CGEF is the tip of the iceberg, and we recognize that. We're an innovative grant vehicle, but we know that we can't do this alone, and we know that we're really only just cracking the tip of the iceberg. And one way to maybe demonstrate that, and I'll leave it at this, is in just the 2 funding rounds that we've had over 600 applications. And while we were super excited yesterday to announce our 8 grantees, that's 8 out of over 600 solutions that are being left on the table. And so really just would love to engage in a dialogue with all of you of how do we think across this capital continuum of maybe where CGEF is here at that flexible grant capital, but we know we really need to set them up for the commercial investments kind of on the other side of the capital continuum. And so would really love to work with all of you to figure out how we do that, so that it just doesn't end at the grant capital. It's really setting them up to be able to unlock more finance for these climate and gender solutions.
Thank you, Carrie. Very, very interesting learnings. And this builds up to our next speaker and her experience as well with the Women's World Banking Asset Management. Elizabeth, could you share with us a little bit of the Women's World Banking Gender Climate projects, and what role do you see financial service providers can play driving these initiatives forward?
Thanks so much. And yes, I think a lot of the work that we're doing is very related to some of the CGEF experience we just heard about. So yes, as I mentioned, at Women's World Banking, we've long recognized that the same women that we reach through the work that we do on financial inclusion are also the women that are most impacted by climate change, as we've also heard. But just to mention one more statistic, and we've seen that more than 800 million women in the most climate affected countries actually have no way of immediately receiving emergency relief payments once a climate event, a climate crisis hits, because they don't have access to the technology, to the tools, to the bank accounts immediately to receive those payments that the governments often try to pay out immediately. So that is a real challenge, but that's also where we see an opportunity for financial service providers to come in and support women in being more financially connected, and therefore also better to respond to climate events. So we see this important role for financial service providers, both on the adaptation as well as the mitigation side. So we're working on the adaptation side on things like insurance products, savings solutions, digital payments, emergency loans for the women clients, but also on the mitigation side to fund more investments into green solutions, into electric vehicles, into solar panels. So really trying to work on all ends. So how we do this at Women's World Banking, so we've two main arms just to simplify. So one is the advisory side, where we work globally with financial service providers, and then we have the investment arm. So on the advisory side, we really work closely with the financial service providers, being it large banks, insurance companies, fintechs, and so on, but also policymakers. And we do a lot of the primary research to really understand also how are the women clients impacted by climate events. What does being financially excluded mean for them? What are the unique challenges that they face? And then we work with the financial service provider in our expertise around women-centered design to design, pilot, and roll out solutions that specifically address these challenges, but also financially sustainable. So just to mention an example, we've been working with Bank of Baroda in India for quite some time to increase the savings frequency, especially for the women customers, by designing the savings products in a way that really speak to those women. And we really saw an increase in how much and how fast women save. And that made a real difference when in 2023, there were devastating flood in those areas of their clients, and women were able to access their savings and having a safe way where they had put the money in, but it doesn't get lost immediately in floods, make a real difference in a climate event. And then on the other side, on the investment side, where I specifically work, so we make, as I mentioned, private equity investments in financial service providers, where we also then, as a shareholder and being on the board of directors of these companies, can really work with them in getting their strategies and also their understanding. I think we've heard at the beginning in the report that a lot of the financial service providers often don't look at the data from a gender disaggregated perspective, and they don't often have the expertise. How do I design it with women in mind? And now also they don't necessarily have the expertise or the available funding to look at climate risks of the customer base. So that's where we come in as an investor to make equity investments, but also provide technical assistance, technical support to help them get a better understanding of the customer base, and increasingly also what are the climate risks that these customers face. So what we are starting to roll out now is, in addition to the gender work we're already doing with our investees, to do also some hazard mapping, where we actually look at where are your customers in the country, in your branches based, and overlap with some hazard maps where we see, okay, what are the biggest climate risks in those specific areas? And then also talk to the customers, do some research, primary research, to see how are they experiencing, how especially the women experiencing the impact of climate. What solutions are they deploying right now? What do they see as necessary solutions? Bring that back to the companies to do sort of a risk and solution mapping to really show them, this is what we find, this is what your customers say, and what are the potential solutions that you as a financial service provider can roll out. So just to mention one more example, we've invested in a crop insurance company that works across Sub-Saharan Africa. They're called Pula. They also have a women co-founder, and they provide crop insurance to smallholder farmers across Sub-Saharan Africa, and also starting to go into Asia and Latin America, where they make a payout to these farmers if their average yield is below a long-term average. And increasingly, this is due to climate events. You can have floods or pests affecting their yield, and then they make a payout, which makes a real difference to those farmers. So where we provided now additional research. So these are already experts, I would say, on designing insurance solutions, but they haven't approached it with a gender lens. So we talk to the customer base also and try to understand how are the women smallholder farmers maybe differently affected than the male smallholder farmers, and how are they using also insurance payouts differently. And that was quite interesting because we saw a difference in how women the smallholder farmers were more affected by certain invasive pests and encroachment because they had a different way of fencing or how they invested in fences on their farms, and how they were more impacted. But we also saw that they were actually more likely to buy insurance products, and then also they were using, as I mentioned at the beginning, the payouts of those insurance products more also to invest in the health, in healthy foods for their families, and having an impact on the entire family. So, and we're now working with the company, and also like, how do you design your insurance products with those specific findings in mind?
Thank you, Elizabeth. Thank you both, because you both represent those who are there deploying the solutions, designing the solutions, and investing in them. And over to Jorge, who has also experimented the first of its kind heat insurance for women in India, and is very excited and proud for this work. And so are we. Would you share some of that, how these micro insurance products evolve to better meet the needs of women in vulnerable communities affected by climate hazards?
Sure. So what we did, and I mentioned before, the Self-Employed Women Association, with whom we've been working, a couple of years ago, we joined forces to understand how extreme heat, particularly heat shocks, like heat waves, were impacting the ability of women, informal working women, to get out of their houses and work outdoors in a range of types of work, from ship loaders to recycling workers to just market vendors, and really rapidly enough we realized that there is a direct connection between, of course, that shock and their ability to have income to bring that into their houses. So we with just a temperature humidity based trigger, we deployed technical capacity with a company, Blue Marble. We worked on the ground with a local broker, ICC Lombard, in India, and they were willing to actually issue a policy for that kind of event with that kind of trigger that could be predicted 5 days in advance. This is NOAA information, so it's nothing, too sophisticated yet. And that gave the opportunity for these women to actually have that additional protection. They were willing to actually put a portion of the premium, about 12 to 15%. The rest was subsidized by a grant. That is just to try to prove the fact that insurance actually could be useful for those women sustainably. And we were talking with Citar about that yesterday. That is really hard to keep over time. So that's where the lessons that I'm going to shift now come. So I will leave you with three A's: access, aggregation, and assets. And those are the lessons that we'll need to move forward to see whether these kind of innovations work. What you don't see in the explanation that I said, that I mentioned right now, is that you have the Self-Employed Women Association, which is a trade union that has been able to aggregate over 3 million women across India, 60 years of experience. They have their own banking system. They have insurance companies that provide health and life insurance to their women. They, provide self-care and childcare services across the same members, support each other. They provide employment guidance and placement. So they have a social infrastructure that represents almost a country in a way. Can you do that over and over and over around the world? Are there enough SEBAs around the world that are doing that? So that's where I think these lessons from the 3 A's that I just mentioned come from. First is access. These women have bank accounts because SEBA has been able to create a bank that allow them to have that and have a banking, in a way, certain level of understanding of financial system, financial inclusion. How can we use fintech or insurtech as a way in which you provide access without having to go through a centralized system such as banks, such as getting government issued IDs to allow them to open a bank account if the local banking system allows for women to have access to that or not. And with that, then hence they can access the financial product, which is an insurance. How can you, with InsurTech or FinTech, you can start just scrapping all those hoops and allowing for women to have access to that, regardless if it's insurance, but insurance is the one trigger that is creating all these other opportunities. The second is aggregation. CIFAR was able to mobilize 21,000 women in 3 weeks to sign up for the insurance. It's not that easy to do that. So how can you create systems, again, via technology that allow for aggregation without having to go through a centralized system such as CIFAR? This is really hard. And so I would just, for us, as we are thinking of expanding this effort, scaling up in India with CIFAR, but also we're looking into other countries in Southeast Asia. We're looking into Africa as well to do that. We're looking in Latin America with very concrete opportunities. Every time we talk with the entities that are willing to partner with us on doing this, being that the potential funders of these initiatives or the delivery partners on the ground, they don't have CIFARs. And so it's always that question: how do we aggregate? How do we bring mobilized actors like this? The third is assets. Insurance, and this parametric insurance, as much as it sounds incredibly innovative or not, depending on how you want to see it, it's just an excuse to create opportunities for, in this case, extreme heat, for women to understand how extreme heat is impacting their lives, and for the system that is around them to understand how they can better protect their lives of these women. What we realize is that in the case of extreme heat shocks are, what you see when there is the highest point of impact on morbidity and mortality of persons in general, women more impacted than men because of the type of work that they do. They're just, the biology, the childcare that they need to provide, the imbalance at home as well, the balance of power. So there are multiple elements that make women more vulnerable to extreme heat. But heat stress and pushing up the temperature, the baseline on an ongoing basis, is creating so much impact on their lives. And that is not covered by insurance, in this case, that excuse. So it allows us to realize that there are assets that you can build to prepare and to protect women, in this case, from the effects of extreme heat in this particular example. So, for example, tarps to cover their produce in the market, or to cover their heads, coolers, gloves. So those assets are either not being seen by the financial system that is looking for the product itself. So there's a huge gap in that conversation on the assets that you need to provide to women, in this case, to be better protected from climate change. And not only looking into a financial product, that it's, the excuse that we use to create the innovation, but there are so much other things. And in that part of assets, and without a close, is the value creation portion of it. How can you use, fintech or other kind of elements that are a bit more decentralized to allow for these women to create their own businesses? Whether that is different kind of clothing that could be used for extreme heat, or designing that, or gloves, or equipment that is not, built for a new climate, a new world that we're facing. So I'll leave you with that. I think that we've learned a lot. The next frontier for us is to, go beyond the microinsurance and start thinking of how we can make, in the case of insurance, make it a bit less expensive, looking into meso level insurance, looking into influencing regulators, which are super, what's the word in English? Retrograde. I don't know if that's a word in English, but in Spanish it's retrogradas, which means that, they are not seeing, they are certainly not seeing the future. So how can we create an environment that allows for this kind of financial innovations to actually be broadly applied? But I'll leave it there. I think I spoke more than what I needed.
Thank you, Jorge. And actually, you just build a perfect bridge for our next two panelists, because we've heard now some of the solutions, some of the innovators, some of those women-led solutions, some of the investors, some of the innovations already on the ground. But now we're going into the ecosystem enablers, the think tanks, those who are learning the big picture. So Anand, with all of the research that you and the team at Microsafe Consulting have done, what else is there to be done between financial service providers and local communities to ensure financial products are designed in a way that respond to these challenges that Jorge, Elizabeth, Carey have been mentioning women face?
Yeah. So I think one major problem that we have sort of come across when we work with financial service providers, uh, it's not a problem, but it's their DNA. They are very regimented and they can't help it because it's a model which has been designed to scale. It's a low ticket loans that you're giving. You cannot really customize beyond the point. So they work in a very regimented fashion. So and in that regimentation, to have them to be more cognizant of the special needs of women becomes a little more difficult. What sort of stonewalls the conversation is also this fact that the senior leadership at these inclusive financial institutions typically tend to think that because 99% of my customers are women, so I'm pretty much sorted on that front. So there is a saying in India which says that the place which is the most dark is one right under the earthen lamp. It's pretty much like that. So you have light everywhere, but the place just under the earthen lamp is the darkest. So it's pretty much like this. When it comes to conversations on gender with some of these inclusive financial institutions, you tend to feel that they don't want to go beyond their regimented styles, and they don't want to even acknowledge that they aren't very gender centric. Now, how do you sort of then overcome these barriers? So when it comes to, so one thing that we have been sort of advocating and speaking to is of course our research clearly points out that women are more likely to suffer the excesses of climate change. So that has very clearly borne out from our, and because they have lower numeracy skills, they have lower access to bank accounts, they have higher share of agriculture workers. Men are most likely to move out to town. So they're more sort of, so this is something that our research has clearly borne out. So that, of course, we communicate. We have also developed a climate resilience index. Some of us in this room, they know about the climate resilience index. We have tested that in 3 inclusive financial institutions in India. It sort of maps the exposure of the smallholder farmers on 5 capitals. So there is human, natural, physical, social, and financial, if I'm right. There are 5 of those. And in each of this, women are more vulnerable. The index clearly shows that. And then, of course, we show these results to the financial institutions. The point to tell them is that you need to work closely with the NGOs who are more sort of focused on especially the one who are working on climate resilient technologies and stuff like that. You need to work more closely with the government institutions who have social protection and cash transfers program. You need to work closely with the value chain players, because a lot of these value chain players are the first point of disseminating information on, let's say, what are climate resilient seeds, right? So once these FSPs, the financial service providers, become more engaged with their customers, number one, more engaged with the local ecosystem, who are more tuned into the needs of women, especially the NGOs and the government, then there is likely to be more traction on the financial service providers sort of fine tuning their products for women. I'll pause there.
Thank you, Anand. And over to you, Peter, who, as I mentioned, led many of the research at this intersection and about what can be done. And in your recent reports, you've highlighted the importance of inclusive finance in climate action. And we've discussed a lot about this intersection. And just following up on Anand's comment, how do you see this financial services evolving to adapt to the context of climate change?
Well, the short answer is not quickly enough, not nearly quickly enough. When we started work 2 years ago, we did a product landscaping to see if you go out in the inclusive space, you look for products that specifically address climate adaptation and resilience, what do you find? And the results we published at the time, they were disappointing and distressing in a few different ways. One of them was gender. So we looked specifically for products that were designed for and marketed at women. And out of 100+ products that we came across, we found exactly one that had a focus on women. It was an interesting product in Bangladesh, cyclone cover that also included cover for gender-based violence, which often increases in the wake of climate shocks because of stress on the household. So that was an interesting one, but that was the only one, literally. Since then, I feel like we are making some strides forward. There's a bit more awareness in the space. There's a bit more activity in the space, but clearly not enough, right? So it's great that we're having these conversations. I hope that many of these conversations translate into actions as well. To help that process, CGAP has identified a range of opportunities for financial service providers to better serve women with bolstering their climate resilience and adaptation. I won't have time to go through all of them here. I'll go as long as until Nelly shuts me down, as long as I can. If you want to read more about it, you can go to cgap.org/climate. Look for a couple of papers by my colleague Jamie Anderson, who has written quite a bit about this. So, but just to highlight a few, the first one I wanted to note was financing labor-saving assets. So one of the things that climate change is doing is exacerbating existing inequalities around unpaid labor that women and girls do. Because when someone needs to travel further to fetch water, guess what? It's women and girls who do that. When someone needs to spend more time collecting firewood, guess what? It's women and girls who do that. So any solutions that help increase the productivity of women and reduce the pressure on their time can be really important in improving their climate resilience. So for instance, there are solutions for financing rainwater harvesting tanks. Very simple solution, helps to reduce that time cost of collecting water for people. Sewa in India that we also work with, they're a phenomenal organization. One of the things they do is finance biodigesters and biogas appliances, which has a whole series of benefits, including reducing indoor air pollution. But one of the things it does is reduce the time pressure on women to collect firewood. What's interesting about that one is also that they have tapped into carbon markets to finance 90% of that asset from global carbon markets and making it more available for clients. The second opportunity I want to highlight is about transportation and logistics. So that lack of mobility, as we know, is a major issue for women and girls in a lot of contexts. In a climate setting, what it does is limit their opportunities to adapt to climate change, adapt their lives and livelihoods to be more climate resilient. It also ties in with the unpaid work issue, of course, because if you can take a motorbike for 5 minutes instead of walking 2 hours to get water, that's a time saving. But in a lot of contexts, it's difficult for women to do that because they can't travel on a motorbike with a man that's outside the household. Tugende in Uganda is one company that some of you know about. They are an asset finance company for motorbike taxis. They have a particular drive to onboard female drivers, which is a simple way to address that challenge. If you can ride with a woman, maybe that's easier. I think Women's World Banking is in Investee, if I'm not mistaken. A third opportunity is to meet women where they are. We know that women use informal financial services more than men do, partly because of those time and mobility constraints. So some providers are figuring out that working through local savings groups and co-ops is a great way to reach women. It can also be a safe space for women to engage with male agents, which can be problematic in some contexts. So there are examples of providers doing that. A fifth is building flexibility into offerings. Some providers are building sort of modular offerings where clients can pick and choose the particular suite of solutions that they want, which can simply make products solutions that women can access more relevant for them. Samanati in India is one example on that. And the last one is digital tools that we all know are so important for access to information, for access to finance. We also know there are all kinds of issues around device ownership, around literacy of various kinds that you need to make use of those services. But we do see providers experimenting with new approaches to that, including to device financing, including on agent networks, and including models that sort of combine low touch digital channels with high touch in-person channels. So one example I really like is Koamana in India that built a call center with staffed by all women as a safe space for women to call in and get troubleshooting help from someone who's a woman and not a man who's going to mansplain it to them. So those are a few opportunities that we see. There's a lot more to read, so please go to cgap.org/climate if you want to find out more about that. But with that, I think I need to drop the mic.
Thank you, Peter. Yes, there. Maria is the real. Yes, but I just I want to close before closing the panel completely and thanking you and highlighting some of your voice. It takes a village. I think a lot of you mentioned the network effect and the central intersection, the big question of who have access, the solutions that are out there and the things that we can do, the importance and the urgency of this gender lens. But without me closing the panel, I would leave it to you for 30 seconds to say what is like the one thing that you think is urgent in terms of collaboration. So the reason that we're here, and after this panel, we're going to share the research. So we're going to share a briefing of this event, the recording, and we're also going to share some of the research and the initiatives that our colleagues here lead, hoping that you are inspired to connect and collaborate with them, because this is what success is for us. So in 30 seconds, what are the collaboration opportunities that you see? And in the face of what you've heard from your other panelists and from those here in the audience, and of course for us in the CIFAR Alliance.
All right, let's see if I can do it in 30 seconds. I was excited to see our CPI colleagues in the room, because the call to action I'll leave is actually a data point that they have, which is of the over 600 billion in climate investments in 2019 and 2020, less than 2% of that was invested with the gender lens. So let's get creative. Let's come together and close that enormous gap. And also wanted to share, you're going to get a bit of a 2-for-1 special here. My colleague Amanda Lonsdale, who's the Chief Investment Officer for CFDA, is going to slot in as I race across town to one of our CJEF events with our fabulous grantees. So thank you all, and let's connect.
Thank you, Carrie.
Yeah, thank you. So, as we heard, addressing this challenge of climate change, and especially for women, will require a lot of collaboration between the public, the private sectors, and I think we also bring the perspective of investors into this, and we're trying also to show this is not only necessary from like a social and environmental perspective, but we're also trying to show there's a real business case of investing in women and also making them more climate resilient. So we hope to also bring the private sector and the investor community along on this journey.
Thank you, Elizabeth. Jorge.
So based on the learnings from this experience with CIFAR, we have created this concept called Shield Her, which is a comprehensive and very holistic approach to how to operate in the space of extreme heat, and how can we use insurance just as one of the multiple elements that you need to have in place to create financial inclusion, financial literacy. So I will invite you to visit our website called 1 Billion Resilient, where enough information is there about this product, but also the approach that we're having. And we also have an alliance called Extreme Heat Resilience Alliance, FSD. I can see here members from FSD that are part of that alliance. Welcome anybody to look into how we can connect you with 60 plus organizations that are working on extreme heat. If you're interested on that, some of those on finance. So thank you.
Thank you, Jorge. Anand.
Yeah. 30 seconds. Essentially, what I feel that a lot of heavy lifting will have to be done by not the financial service providers here, because they are limited by their context. A lot of heavy lifting will have to be done by the DFIs and the sector level organizations, and also by the government. So I think that's two key takeaways, because it's an issue of missing markets. So one has to be very cognizant of that. Get the DFIs, the NIEs, and the governmental institutions do the heavy lifting on coming up with structures which will kind of provide the necessary comfort to the financial service providers to be able to provide these services and products.
Thank you. Peter.
To me, it's clear the big opportunity and need is for us to start building some real bridges between the inclusive finance community and the climate finance community. If we want to drive locally led adaptation, there's no better way to do that than to get adaptation finance in the hands of the people who need to adapt. And there's no better way to do that than inclusive finance, but there's not a lot of recognition for that. Inclusive finance providers, as we've heard all through the session and from the data, don't know what to do. They're not climate experts. They don't have climate experts, not planning on hiring any. So we need to build those bridges at a technical level, at a finance level. So it's up to us in this room to walk out that door into New York Climate Week and start really building those bridges and building those connections and making things happen.
Thank you. Thank you, Peter. And yes, exactly. This is what the CIFAR Alliance is about, what this initiative is about, particularly bridging those bridges, building those bridges, sorry. So I wanted to open the floor for some Q&A or comments. We left some time before we have to leave for mingling and networking, but wanted to open the floor to give you all the opportunity to share insights or ask questions to our super panel today. Yes, please. You can keep it.
Thank you. So one thing that came out very clearly through multiple presentations was this need to get individuals, and particularly women, into the formal system for financial records, credit history, and so forth as a kind of underlying components of the bigger picture, as it were. One thing my organization Climate Kick, which is an innovation agency, has been focusing on is, particularly in East Africa, is the role of things like AI, machine learning, and combining it with open source Earth observation data to try and address some of these things. And so really all I wanted to mention was that we have a few of these experimental projects underway to kind of test out some of the technologies in the field with a few tens of thousands of individuals in a few different countries. And we're starting to gather some data and insights into kind of the mechanisms and the application of the tools. And I think one thing we did observe was it's actually very easy on the component around combining satellite data and insurance products. That's actually the easy bit. The difficult is getting people into the system so they can actually then make use of it. So just an invitation if we want to connect it with those projects and gain some data from that. Thanks.
Jason Spenceley with the Global Environment Facility. Jeff, this has been a great panel. Thank you so much to CIFAR and MetLife Foundation and others for organizing it. I've learned a lot. Of course, one of the challenges with inclusive finance for climate action is the cost of capital, and specifically the terms and the interest rates. So I'd love to hear any experience and insights of models to drive down the cost of capital, using blended finance, public finance to de-risk, to do interest rate buy downs, to make the terms more accessible for smallholder farmers, micro enterprises to transition to climate resilient practices.
For sure.
Thanks. Sure. No, it's a very, very important question. So on our side, on the fund side, we use also blended finance models. So we have our investors, we have public investors that take more like a first loss position. And then we have the more commercially focused investors that take a higher position in order to be able to make these type of investments. Because also, as we've heard, with the challenges showing, the track record and everything, to make those investments more attractive for commercial investors. And then also blending it with the technical assistance, which is grant funded, in order to bring some of that expertise to the financial service provider. So I think it's really important, to bring together different instruments from like more government funded, more the private sector, in order to be able to do this type of work. But also at the level, so there's more like at the fund level, right? Also at the level of the financial service provider, it is often challenging because if you provide, they get also have access often to some grant funding and can do very important work, providing education, for example, to their client base. But when it comes really to their financial products and services, having those directly like subsidized or grant funded is often challenging to make them long-term sustainable, because when that funding runs out, they are not able to like self-sustain that as a bank, as a microfinance institution. So what we're really trying to do is to show and to prove, maybe help fund the piloting of those products, but then also show how can these be financially sustainable. And we've seen, for example, one of the investees we work with, they have a specific women-focused lending product that they provided at a preferential rate to women customers. But then they could also see over time that actually the women customers were also better repayers, and they had better retention rates. So even when they don't get the subsidized funding for this anymore, it actually makes sense for them to continue providing this at a slightly lower interest rate in the long term that makes sense for them also from a business perspective, right? So it's always finding this fine balance between, yes, enabling to pilot, to test these solutions, but making sure they're long-term financially sustainable.
Sure. Yeah, I think, yeah, Amanda, I'm from CFDA. I'm not Carrie anymore. Yeah, I think one of the things around, cost of capital and stuff is also to understand what are we de-risking? And I think the point Elizabeth just made about women being better repayers, I think there's sort of this assumption that, well, it's this new idea of lending to women and these new products, so inherently there's risk, but is there? And what is that risk? Certainly if it's a new product, a new market, it's untested. So we have to look at that, but just women aren't inherently more risky just because we haven't been lending to them. And so, I think thinking about that, I think data can certainly help around that and show, what you've already just said, that you've tracked that they actually aren't as risky. So I think that that's, something very important. And then I think in terms of, interest rates and cost of capital, it's important to also think about like not displacing or distorting the market. And so what can you do from maybe sort of a results-based finance type of thing, like an interest rate buy down and those types of things to incentivize the behavior, whether it's a climate incentive or a gender incentive, then that's some of the things that we look at in some of the work that we do.
Let me just one comment. Yeah. So again, I'm speaking from a structure that we designed for a mitigation project. It was not really an adaptation project. I'm speaking to Dan about it a little earlier. So from a FSP's perspective, the financial service providers, I think the landing cost to the final borrower is important consideration, but perhaps not the only consideration. Right? I think they're also looking at loan to value. They want to make sure that the coverage is as high as possible because that's what typically clients want. And I think a bigger consideration for them is really the credit losses that they are likely to see into the future. So I think more than interest rate, again, for the final customer, it's again the EMI, the equated monthly installment that a customer has to pay. So she is willing to maybe have a few basis points extra, but for the fact that she's now getting the loan. So I think that's more than the interest rates. What we have found through our research is clearly the access is more important. Being able to get that loan at the least cost is important. And from the financial service provider's point of view, it's more important to make sure that their credit losses are reduced. And to that extent, I think more than the concessional blending, which sort of helps you lower down the cost of capital, I think what becomes more important are some of the guarantee structures which lower your credit losses. I felt that perhaps could be a more effective way of channelizing capital than focusing on the final landing cost to the borrower.
Just to add very briefly to that as well, that there are two distinct sources of types of risk, right, that we can apply risk enhancements to. One is the risk to financial institutions that their clients will default as a result of climate change. And as I mentioned, our concern is that financial inclusion as a whole will start receding, is actually already eroding. And we can see it in this country as well as climate risk increases. So just preventing that is extremely important. And that just means de-risking the financial institution, the clients, and thereby the financial institution from climate risk. The other is the risk of innovating and creating new solutions and venturing into new products that support climate adaptation. What we need is financial institutions to develop new solutions that support climate adaptation and resilience for their clients that they don't understand how to build yet. We need to help them build it. Once they built it, we need to help them test it and scale it. And that's another form of risk for them that they're not going to take on their own and that we also need to cover. We think there's a huge opportunity for climate funders in this space, not least on private capital mobilization, right? So one of the questions we're asking ourselves is, are organizations like JEF or GCF willing to sort of come into that space? As an example, we're talking to an MDB about a very large fund in the billions that they would set up and mobilize non-climate capital for investing in climate action through inclusive finance, but for which they would need a few $100 million of credit guarantee because they can't jeopardize their AAA rating. It's now a non-starter for them. If they can have the guarantee, they can do it. If not, they won't. So from where I'm sitting, that's a huge opportunity for the climate finance crowd to say, hey, look, I got an 8x return on this money that I put as a guarantee and mobilize non-climate money for it. So that's something we'd love to talk more about.
Thank you. So I guess one more question, comment? Yes, thank you.
Yeah, thank you. Dan Waldron from Acumen. I guess the question, and it's one I keep coming back to, is there's a lot of talking about working through existing financial institutions to channel capital to the things we believe are crucial for women to adapt to climate change. And whether we think that's sufficient, whether these institutions are correctly built for that purpose, right? Financial innovation for people living in poverty doesn't tend to come from existing financial institutions. It usually comes from new types, new innovators. And maybe this isn't a question anyone can answer, but I'm just curious, to what degree do you think are we balanced in that right way? And is there enough prospective willingness, capital, incubation of potentially new financial institutions that could be built around the sort of challenges we're trying to solve?
From my point of view, the answer is no, it's not sufficient, because we need everything everywhere all at once, right? That's the reality of it. So everybody needs to play a role. I think what we've seen when we've gone, so we did a scan of providers in the space. We talked to like 150 organizations of all kinds, and we had very little traction with most players in the space, including the fintech space, the DFS, digital finance space, mobile money space. I was super disappointed. Like, there was just no conversation to be had with any of them. The fintech space and the climate tech space is a little better, but the sort of traditional fintech space, there was just not enough going on. What the traditional, I agree with what you said about traditional financial institutions, MFIs and whatnot. What they very much have going for them is the relationship with the client, the understanding of what the client goes through, and the sense of urgency about doing something about that. That's what jumped out at us in the conversations that we had with all manner of players, and that's worth a lot. So just not to discount that, I think it is really important. That said, do we need new fintech and climate tech solutions? Absolutely. I'm interested in embedded finance, for instance, in this space, right? Because the solutions that need to happen have to have a combination of information about climate adaptation and what strategies people can pursue, how to weigh those strategies and pick one. Then you need a solution that actually implements that strategy, and then you need financing for that solution. And those three things need to come together. So I'm really interested in embedded finance. So should the MFI be out there selling financing for irrigation products? Maybe not. Why not partner with the irrigation vendor and just embed the financing, and they can go do the selling, right? So happy to chat more if you have ideas.
We've got examples.
Yes.
Awesome.
Please do chat more. Do you want to add something else? Oh, I thought you were
No, I think it's a great point, and I fully agree, right? It's not enough to just work with the traditional players. I think the traditional players, as you said, so they have a lot of the outreach and the connections, but they don't often have the knowledge and the technology. And I think that's where a lot of the new innovations come in, right? And a lot of the startups, and yes, we see a lot of the problem there is that they are often underfunded. It's really hard to get from the startup phase into like the scale where the larger investors really come in. We see a lot of opportunities really in the collaboration. So where we see that some of these startups, more tech-focused companies, collaborate with the large traditional players because they have the outreach, they have some of the funding to layer on those solutions. For example, I mentioned before, one of our investees, Pula, that's an insurtech broker. So they basically have the technology, the expertise, but they're not insuring themselves. They work with the large insurance companies in order to help them provide this product. So they're not taking the insurance risk because that's impossible for a startup to do, basically. But they have this specific expertise, work with the insurance companies, and then also work with governments or large agricultural organizations to reach the smallholder farmers. And we are now trying to increasingly connect them with the larger banks, the financial service providers, to link those insurance products to also lending products for the smallholder farmers. So I think I see a lot of opportunity in that collaboration between those newer innovative players and some of the traditional models that have the bigger balance sheets and the big outreach to the customer base.
So we're going to have more time, hopefully, after this panel. And our up next is an exciting announcement. But before we go over, I really want to thank our panelists for being here, for sharing, for your passion, your work, and so much that you shared with us this morning. And hopefully it takes a village. As Carrie said, you are part of that village. We hope we are all part of that village, and there's more connection. So a big round of applause to our panelists and their great work. And we have one more thing in the agenda. We, as in the CIFAR Alliance, we're very proud to think and do. So this is one of the founders of the CIFAR Alliance, David El Ser, that I'm particularly happy to introduce. He's the former Chief Innovation Officer of PFA Global, and he's at his heart an entrepreneur. He's also one of the founders and co-chair of the CIFAR Alliance. And within the CIFAR Alliance, they started a journey on universal climate resilience, which he's going to talk to you a little bit about. And from discussions, from a collab, a startup has been born, and he has now gone back to his entrepreneur life and founded this startup. And we just want to share with him his excitement and the announcement of his startup that he's going to be talking to you right now.
Muchas gracias, Nelly. And thank you, Dan, because you set it up beautifully for the announcement. As I was listening to the panel, it was really valuable for me because I realized, okay, I'm not that crazy. They're talking a lot about what we're trying to do as a startup. As Nelly was saying, within CIFAR 2 years ago, we started this initiative, we call it UCR, Universal Climate Resilience. And it really was born at a COP, a dinner, when we're all tired after some event. There was no alcohol involved, I promise, because they didn't serve it. But this idea of helping, of our technology maybe today being able to help everybody like universally, every human being should be getting some support as they go through a climate disaster that we all together have caused, right? In different proportions, but we're all responsible. Could we all help those that go through the worst? And maybe 10 years ago, the answer would have been, no, we can't. But like 2 years ago, we're wondering, maybe we can, right? And we started this initiative with support from Charlie. You were the first one, thank you. You were as crazy as us. And Kelvin also helped from FSD Africa, and Ali and Carolina helped from the center. And we essentially had a series of conversations with a number of players just to learn, could this hunch that we have, could it be possible? Is it feasible, right? And we learned a number of things. We don't have enough. Go to cigap.org/UCR, joking, for the whole report, but we did learn a few very valuable things. First, I mean, we all know financial inclusion, mobile money is getting everybody included soon. We're not there yet. I was horrified that there's 800 million women that don't have access. Shit, sorry, but we're making a lot of good progress, right? What else did we learn? We learned that the humanitarian space, it's always great to go look to adjacent sectors, see what they're learning and see what we can copy and kind of bring over. They're learning that every dollar that you give in advance of a disaster gets transformed into $5 to $15 of savings in losses. It's a huge, huge impact multiple that happens over a week. I don't know, I'm not aware of any other impact investment that has that sort of return. Annualized, I don't even know if the math is crazy, right? Why don't we do more of that? I don't know. But one of the reasons is it's hard to know where disasters are going to be happening. But one thing we learned talking to all these experts is that, well, AI is changing that. The same technology that has given us wonderful ChatGPT and all of those things, same transformer deep learning architecture is being applied to weather data and is also overperforming traditional systems. Also in places where there was no historic data. So this early warning system lack that we have is being resolved with technology. So that was interesting. And of course, we all know AI, ChatGPT can be your customized anything, right? You can ask it about anything, can help you with almost anything. So after doing this research, these conversations, this research, we thought, okay, what do we do now? What do we do with these insights, right? And thanks to Kelvin, who was able to mobilize equity funding, we're launching this startup. We're calling it TRAM, in honor of the very first climate hero in recorded history. There's a tablet, cuneiform tablet, not Android tablet or iPad tablet, cuneiform tablet that tells the story of the Sumerian king that was at home, and one day this one god of the Sumerian pantheon came over and said, hey, Atra-Hasis, that's the name of the king. There's this other guy who's really upset with humans because apparently we make a lot of noise. That's literally the reason in the tablet. And he's gonna flood the whole planet. So you better build a boat, put your animals and your family in it and sail away until the floods recede. This is 800 years before Noah. So the Bible totally ripped it off as the story. Very geeky thing on the, go to the Wikipedia, you can find it. So that's the name of the startup, because we think the technologies today enable us to do the same thing, give warning to people, give them a plan. And this guy didn't need it because he was a king, but most of us would need some financial help, right? So these three things are what Atram is going to be building. We're going to be building technology so we can start deploying these things exponentially. It's great that we throw TA consultants where we're learning how these things work, but that's not going to scale to the size of the problem. We think technology could, right? So that's what we're in the process of. Don't ask me very hard questions because we literally lost that company a couple of months ago. So we're still working through the business model, but we think the core of the value proposition is going to be translating early warning systems from the wonderful systems that are coming along, but translating the message so somebody on the ground can actually understand it. I don't know if you check your phone in the summer. I'm from Madrid where it gets hot frequently, and I get these cryptic messages about heat waves. I'm like, but I'm supposedly a climate expert. I don't even understand this climate warning. So that's one thing we need to do. Make sure the warnings that are out there are going to get better and more frequent and more customized, actually can be understood by the people that need to act on them. Whether that's a low-income person that maybe wants to take some action, or whether it's a financial institution that wants to roll out emergency loans, right? So that's one thing. The second thing is the plan. It's not rocket science what to do when there's a flood or when there's a heat wave or when there's a wildfire. There's a few basic things you should follow, but if you've never gone through a disaster before, you're a little clueless, speaking from experience. You just don't know what's the right thing to do. You may end up doing things that are bad. Well, an AI that has been trained over and over, disaster after disaster, on what things work in the case of a flood, what implementation, whatever it is, whatever trick you can pull off that works, should be able to help other victims, right? At least do the smartest things possible. We're not going to get rid of the hurricanes for a while. It's going to take decades until we go back to normal. But in the meantime, we could be a lot better at responding and reacting when one happens, right? So that's the plan. And then the financing, I heard emergency loans. That's what we think we're excited to be enabling. A financial innovation that's a hybrid of a loan and a parametric insurance product. So essentially a parametric emergency loan. I don't know if that's a bit of a, I don't know, Peter Segab can come up with the sharp term, but we think there's value in combining the risk profile of an insurance policy, but with the familiarity of a loan, as we, both for the, say, MFI, for example, and the individual who receives the financing. So these are the three things we're going to be pursuing. We're looking to do a pilot in most likely Kenya, right, Kelvin? Oh, by the way, I forgot to mention Ivan, who's behind Kelvin, who's our head of Africa. And he's going to be the one in charge of the pilot. So anyhow, I'll stop now because I know you're all super hungry for a second breakfast. I'll get myself out of the way, but thanks. And please be encouraged that you can start having a conversation at a panel or at a dinner, and a year or two later, you're launching a startup. It's possible. And a startup that is not underfunded, I like to say, not yet over mentored. I love that line. So if anybody wants to mentor, we can still take some of that. Anyhow, thank you. And if you have any question or comment, please come talk to us. Thank you.
Thank you, David, and congratulations. And now we open the floor to connect with each other. If you have any questions from the panel, if you want to connect with David, a housekeeping item, when you leave, if you can return your badges to the security desk, that would be highly appreciated. And again, it was super inspiring seeing it from research insights to action at the end. And again, thank you so much for being here in such a busy week. And yeah, thank you for coming.